Good morning to all traders and welcome to another Markets in Waves video. Today it's Monday the 24th of May and we have another Elliott wave update for you right at the start of this week. Do not forget that the coming Friday is also going to be on the 28th. It's also going to be the last Friday for the month. Okay, so likely we're going to have volatility increasing. Not that we didn't, but likely that we're going to have that increasing a bit further. Now in today's video, guys, I want to have a quick look on the US index, the euro dollar, pound dollar, oil, as well as the S&P. And as requested, we're going to have a look also on the longer term, just so you guys have a better perspective of how the long term waves are expected to be pretty much after a request. So starting on the DXY, let me just take this off quickly, and what I'm going to do is go down on the daily chart. I'm looking at this as a last wave to the downside, wave 5, right? We are looking at a W, X, and Y correction over here in the supercycle degree, A, B, C in wave X, 1, 2, 3, 4, and 5 in wave C of X. We are currently in wave 5 in the primary degree, right? So now a little bit further down on the 4 hours. And what do we get? We get the 1, the 2, the 3, the 4, and we are in wave 5, right? Now, pulling the Fibonacci retracement of the leg to the upside, which is wave B, you know, we've done the 38.2 Fibonacci, and the next level to the downside, should this be, of course, the case, it would be the 88.22, and from there, the 84.53. Now, pulling a Fibonacci from 1 to 2 is something that we can do to really check where exactly we're heading. Now you can see that we nearly did. Maybe that's the the 2 is not 238 perhaps. Let's just try this. 1 second. 2.382. Pretty much. So it's possible 3.382 is where wave 5 is going to end, which comes very close to the 61.8 Fibonacci extension, which is a respected level when we have a W, X, and Y correction for wave X. And it's very near as well the 261.8 Fibonacci extension of waves 1 and 2 over here in the intermediate degree, the red ones. Okay, so that's what I'm looking in the long term, guys, so that you have a better understanding of what I am looking at. Now, back to our short-term stuff. And over here, we were looking, actually we're on wave 3 of 5, by the way, right? So we were looking down here at the at this structure. We call this an ABC, and it can be a case where this is also an ABC and 1, 2, 3, 4, 5. This is what we said last time, but this is the alternative scenario. I'm leaning towards a scenario, guys, where this move to the downside ended over here, and that was wave 2. And I will tell you why. Is because by pulling the Fibonacci over here, you're going to notice two things. One is that we've done the move down here to the 78.6, yeah. And then the other thing is that the move up here is the 23.6, okay. So now, excuse me, we're looking at this move, not this, the wave 2 and the wave 4. So the wave 2 did nearly like 90% correction or something, okay, and the wave 4 something like that would be right about 20%. So these two together, if you add the 10 and the 90, we get to 110, which is roughly the 100%, which we need when we have a the rule of the guideline of alternation, that the corrections in wave 2 and 4 should equal 100. So this is what the only thing that tells me that, okay, maybe we are done with this wave down here now, and we corrected. Okay, so we're not expecting like a flat or anything in this particular case. So that's the ABC, 1, 2, 3, 4, 5, and then we've got another correction, and we're going to continue lower here. So this is what I'm looking at in this particular scenario. Now the thing is this, that we did the 50 Fibonacci correction over here, and then on the move to the upside we did the 38.2. So now if we break the 23.6 and of course prices remain being below that level, then most likely we're going to continue impulsively to the downside. Okay, now do note that the okay, we talked about the longer term, but the 161 point extension is 88.50. This is the 1618 of minor wave 3. Okay, so wave 3 could end down here potentially, and then we're going to get 4, and then we're going to get the 5. That's going to be in the immediate 3. But let's don't carry away you know, too much. Let's look at the 89.47 first, which is a 100 Fibonacci extension. And then, of course, what else we can do, we can go to our newly completed wave over here and look at the 100. It comes at around the 89. Okay, the 100 Fibonacci extension, which could be where this wave 3 is going to end. And assuming, of course, this is 1 and 2, 3, 4, and 5 makes good sense structurally speaking, because you know, our wave 1 and 2 here, if it's done, the 161 for wave 3 is around the 89. So it makes good sense that wave 5 of this ends around the 89. So let's really see how it pans out. We don't have any signals on the RSI and the MACD. Okay, we've had this one, which probably we have received already. But in case we do move higher up, that simply means that wave 2 is going to be here. And I wouldn't be surprised if we see that happening and then continue to the downside. Our wave 1 is literally at 78.6. So there is more room to move to the upside. Now let's go on euro dollar. And I will try to be as quick as I can, because going over the long and the short term, it's a bit more time consuming. Looking at wave B, and I'm expecting wave C in the long term. Okay, that's my A, that's my B, which means we've done 1, 2, 3, 4, and 5. Wave 1 up here only in the primary degree, in the cycle degree, sorry, and we did the correction in wave 2, and now there is an attempt to move higher in wave 3. Yeah, in the immediate wave 3. Hold on. Yes, so assume that that is going to be, you see, this is what happens when you look at the long term. That has to be in the immediate degree. Okay, so everything else goes 1 degree higher. Let's quickly make the change over here. At least that's going to be minor, so that's going to be minute, and our color is green, and that one we can even delete. That one is okay. So that's what we're looking. This is more correct. So wave 1 and 2, and I'm looking internally for 1 and 2, and then internally for 1 and 2. And I'm going to go down on the 1 hour now. You do remember that last time we talked about euro dollar last Friday, I was looking at this move to the upside, and I said that looks corrective, let's go for a flat. And we went for a flat. So far this is a flat, which means wave 2 ended here, and potentially we could continue higher and go to the top of the channel should we break the 122.54. But over here we are still in a flat pattern. In case we do break though lower, because the thing is that I don't really like this for an impulse, right? Then we could be heading down to this channel, which is going to make a much better opportunity to the upside. And all we do have to change is make this a W, X, and Y. It's as simple as that. Okay. Now, what else I'm looking here, of course, you know, because we really need to look at the long term, as I said before, is that the 100 Fibonacci of 1 and 2 gets us to 124. But if we take into account the multi-structural move to the upside in the minor and minute degree within wave 3, we're probably looking at 127, okay, for the end of wave 3 or perhaps even wave 5. We really need to see how this develops on the upside. Now, MACD RSI, no signals. So we can either go up or down. And I'll be fair, because simply I don't like this to be a move to the upside, I favor the downside a little bit more. Given our wave 1 is here as well, that would make sense that we can get down there and still remain impulsive. Now on pound, go on the daily, get out and show you what I'm looking at here. So I'm looking at a W, X, and Y over here as well. This is my W. This is the wave A and the wave B. As you can see, I'm assuming that wave X is either going to be a running flat or an expanding flat, but it looks like to me that it's going to be an expanding flat because a running flat would have finished around that level, but due to the structure of this move to the upside, I'm looking at wave 1 here, right? So we're still not even in wave 3, which means we can extend up to wave 5 or wave X. Now the 161 extension brings us to 153. You might think, what is this guy saying? Is he crazy? But guys, this is the long term, do not forget, okay? This is what I'm looking. My A, my B, and 5 wave impulse up to complete this as an expanding flat. Now let me go a little bit lower so that you can understand what I expect in the medium term and short term. That's wave 1 and wave 2. And we go up for wave 1, 2, 3. I'm expecting 4 off intermediate wave 3. Okay? 4. Now, here's the thing. Let me show you something quickly. From here to here. And let me go to 200. Okay? 137. So if 161, if that's here, if we get wave 4 being equal to wave 5, we get near that level. So I look at wave 3 ending around the 147, to be fair, guys. Okay, but first I think we're going to correct lower, because in my eyes we're looking at another leg to the downside. Why? Simply because we have this over here, and simply because all this thing looks corrective. It could be a case where, yeah, this is like A, B, and C, yeah, and we finished full down here, which makes a bit more sense for wave 2 as well. And then this is what? This is like 1, 2, and then that would be our 1 and our 2 and our 3 and our 4, an ascending triangle, and our 5. It's just a bit forced, if you understand what I'm saying. So that's why I'm favoring a scenario where we're still in wave 4, as you well know. Now, what really happened since last time we saw the pound over here is that we were expecting, obviously, to break, right? So we had another leg up for a fresh high. And that leg up gave us the opportunity to draw an ending diagonal, which to me looks good. Okay, and not just looks good in terms of the structure, because it gave us something that is calling for a reversal, but because on the MACD on the reverse side we get 2 signals that show there is bearish divergence. So I am expecting currently for the 140, 120 or so to break, and from then to move down to 140, then 39.54, and you know how it goes. So, and the moment we get down here, it could be the moment that we are going to end this correction. But, if this is a leading diagonal and this is a wave B, then wave C is going to be a 5-wave move, right? But don't forget, it could be a different scenario where, this can be a flat. So we'll have to change actually that move over here. Okay, nothing else. The B remains the same. The C is still a 5-wave move. The other scenario, of course, as I said before, is that we ended down here, guys, and this is my 1 and my 2, and that's my 3, then my 4, and I'm gonna get another leg to the upside. What would really invalidate for me this move would be the break above 142.43, and then the 38.2 of that, just in case we do get an expanding or a running flat. That's for that. Let's go on the daily. A, B, C. The A is what, 150 or something. The B, it's a triangle, and the C is going to be an a 1, 2, 3, 4, and 5. 5 wave impulse. Now we've done 1 and 2, and we've done, in my opinion, also wave 1. Hold on. No, shouldn't have done that. 1 second. And we've also done wave 1 of cycle wave 3, but we're not done, in my opinion, with wave 2 just yet. Okay. And just to be a bit more correct, let's just look at this correction as well at 23.6 and even lower to 54.89. It's possible should we remain bearish. What happened last time? We're looking at the correction down. Yeah. Still, we remain corrective since this is our wave B. Yeah. We didn't cross above the previous high, so there is no confirmation to validate a bullish move. 1, 2, 3, 4, and 5, which I talked about yesterday. No, sorry, the last session, not yesterday. Let me go down on the 1 hour quickly. What happened last Friday, I think, was 1, 2, and we looked at 1, 2, 3, 4, and 5 to end here, and then we were looking at some sort of like a flat or something, but I was expecting another leg down. Yeah, and that leg down came not exactly as I expected, because the correction we got is different. So that made me change this to 1, 2, 3, 4, 5 down here at 61.52, and I'm looking at this now as the correction in wave 2. Okay, we did the 50. Okay, we did the 50 correction over here, and you know, we still remain, however, outside this ascending channel over here, which is a significant bit when we need to take into account that, you know, there is more room to the downside rather than to the upside. And wave 3 is going to get us to around the 52, with wave 4 at 58, and then wave 5 down at 53, even 49. Okay. Truth is, our previous low is at 57, and this is what we're looking to first reach. So you might ask, so is this the call to the downside? No, this is not what I am saying. My opinion is this. We do get this signal here in the Mars under ACD, and we're getting a correction. It could be a case where we might get that correction being a little bit deeper, right? It doesn't really matter. And by the looks of it, you know, and since, you know, that's wave 1 and of the previous move, you know, and we've got wave 2 really going, you know, quite deep in that territory, then I wouldn't be surprised if we're going to get that being an ending diagonal as well. But my opinion is this, okay? And looking at the indicators as well, I am looking for a move to the upside. Why is it still moving? I'm sorry. I'm looking move to the upside here to offer me a very nice signal both on the RSI on the MACD, okay? Because price obviously would be lower, but the MACD and the RSI, and it looks like it's heading that way, they're going to be higher. So when I receive both those signals, they could be a good indication that a signal, you know, a move to the downside could be coming. The other scenario, as always, guys, we ended down here. Yeah, that was our correction, and this is what you can call it, a leading diagonal, and that would be the correction. So we'll continue higher. Or, you know, even another scenario would be that, you know, we might just get back in here and, you know, consolidate, which means we're going to have a different wave Z over here, or might have to restructure this whole wave B to cater for the new sort of data coming in. And on the S&P, let me go out on the 1 day quickly. That's my 3, that's my 4, and I'm looking at wave 5, and that would be super cycle 3, and then we're gonna get the 4, and then grand super cycle, sorry, and then the 5. So currently, it looks like we ended cycle wave 3, right? And as we talked about that last time as well, let me get these back up. And we were looking at this potentially moving higher and a little bit lower, and it's exactly what happened. But now we started moving higher again, but we received a rejection here. We did do a new high though. However, due to this looking as an ABC rather than anything else, and this looking as an ABC as well, then 1, 2, the 3 and the 4, yeah, and the 5, that would be a flattened wave X, yeah, and then we could get another ABC down in wave Y, which is the 4041, something that we missed going to before. And what else we missed on the downside leg over here is that we missed the channel as well, the base channel. We didn't get that, and we want wave 4 to be on the channel. Not like definitely, but you know, it's a good thing to do, to see. Now we do get a short signal right here as well on the market on the right side, so that suggests, you know, that in case, of course, we don't really break the fresh high at 41.89, most likely to see an 3-wave move to the downside to 40.41, maybe even lower for a false break to 39.80, but not below 39.80. Okay, so guys, I hope you enjoyed this video, which saw the long term and also the short term of these particular assets. Thank you for watching. If you have any questions, you know, as always, don't hesitate to leave a comment, and I will get back to you as soon as I can. Enjoy the trading session, and we'll speak again tomorrow.